Hello to everyone. Today I am here with a very hot topic that is FinTech. It's an introductory video on FinTech for the people who want to develop their understanding about FinTech. It's the first session, and if you are interested to have update videos on banking and finance related topics, please do subscribe my channel that is Financial Reality. Now, here is a disclaimer. In this session, we are going to cover the following topics. First of all, define FinTech, evolution of FinTech and its history, evolution of FinTech key era, pillar to FinTech that include innovation, customer centricity, regulation, and compliance. These topics we are going to discuss in our first section. First of all, FinTech is a portmanteaus of the word financial and technology. Financial technology, better known as FinTech, is used to describe new technology that seeks to improve and automate the delivery and the use of financial services. So here, FinTech is the technology that is used for financial services. Refer to an application, software, or technology that allows the people or the business to digitally assess, manage, or gain insight into their finances or make financial transactions. So it's an other definition refers to technology-enabled financial solution. It's a small description of FinTech. Union of Financial Services, information technology to make transactions faster, easier to use, and more secure. You can say it is the modified or the current definition that we can use for the FinTech. Evolution of FinTech. We are going to start with its history. History of the FinTech. Technology has always played a key role in the financial sector. So from which point onward can we talk about FinTech? Key eras in the timeline of FinTech are FinTech 1. It started from 1886 to 1967, is about infrastructure. Start speaking about financial globalization, telegraph as well as railroads are steamship that allow for the first time rapid transmission of the financial information across borders. So here, one is the telegraph, and on the other side, railroad are the channels that link the financial services within the globe. The key events on this time include first, transatlantic cable. It was introduced in 1866, and Fedwire in USA. It was the era of 1919, 1918, such as the telegraphic and Morse codes. Now, here on one side we have the telegraph. To make the transaction secure, they have established the Morse code, each side having the similar code, and they figure out the transaction value on the basis of those codes. in 1950s brought us credit cards to ease the burden of carrying cash. It was also innovative step to digitalize the currency and convert it from paper or the coin money to a pocket credit card. Diners Club introduced theirs in 1950. American Express Company followed with their own credit card in 1958. So the first card was introduced by Diners Club in 1950. Now, the second era, that is FinTech 2, was starts from 1967 and end to 2008 is about the bank. So banks are the key economic tool, or we can say that the role of banking system in the economy of any country is like the circulation of blood within the body, because banks play their roles in order to boost the economic activity within the country through the circulation of money. Either it's a paper or coin money or it's digital money. This period marked the shift from analog to digital and is led by the traditional financial institution. First of all, launch of first handheld calculator and the first ATM installed by the Barclay Bank in 1967. Establishment of Nasdaq, the world's first stock exchange in early 70s. It was the second initiative. In 1973, SWIFT, that is Society for Worldwide Interbank Financial Telecommunication, was established, facilitating the large volume of cross-border payments between financial institutions. So SWIFT is very effective tool because it's supported by the coding system. In 1980s, saw the rise of bank mainframe computer and the world is introduced to online banking, which flourished in 1990s with the internet and e-commerce business model. On the one side, we have the computerization that was initiative in 18, and thereafter all the networks were globally connected through internet in 1990. By the beginning of 21st century, banks' internet processes interactions which outsiders and the retail customers had become fully digitalized. This era ended with the global financial crisis in 2008. Now, every crisis brings a shift, and we learn a lot from the crisis. On one side, we face the damages. On the other side, we have shifted or bring new innovation within the system. The next era, that is FinTech 3, start from 2008 and end to 2014, is about startup. Origin of global financial crisis that soon strayed into a general economic crisis become more widely understood that developed the distrust of general public on the traditional banking system. Because it happened during that time, a financial company having AAA rated become insolvent. Definitely, this type of happenings develop the distrust of the general public. This fact led to a shift in the mindset of the financial professional and pivot away to a new industry. FinTech 3 is the era is marked by the emergence of the new players, particularly FinTech startups, alongside the already existing ones such as the bank. Bitcoin V 0.1 in 2009 is the event having the major impact on the financial world and is followed by the boom of the different cryptocurrencies, which in turn was followed by the great crypto crisis in 2018. Now, on one side, a different type of world introduced, a new type of digital currency. And on the other side, we have seen the crash of that particular new innovative digital currency in 2018. Smartphones penetration enable internet access for the millions of the people across the globe that shape the face of fintech in the mass market. Smartphone has also used different financial services. In 2011, saw the introduction of the global wallet, followed by Apple Pay in 2014. So, in this era, a new initiative or innovation comes in the market in order to cater the need of the people to meet in a comfortable way their financial needs. Next era is FinTech 3.5 that started from 2014 and ended in 2017 is about globalization, financial world and expect bring the expansion in the digital banking around the globe will the improvement in the fintech technology. It puts the focus on consumer behavior and how they assess the internet in the developing world, for example, in China, India market that never had time to develop the Western level of the physical banking infrastructure and so were open to new solutions more quickly. This era is marked by an increasing number of new entrants and their last movers advantages. Now, next era start, that is FinTech 4 in 2018 and still ongoing is about the disruptive technology, blockchain technologies, and open banking are continued to drive the innovation of the future of financial services. The game changers here are new bank that challenges the prices and the complexity of the traditional banking while earning customers trust through these simplified digital only experiences and low to no fee. So on one side, they bring the innovation with providing the comfort to the customer. On the other side, they facilitate it with low or no fee. So that bring an attraction to the customer as well. Machine learning on its part is transforming the way people interact with banks and insurance companies receiving bespoke offer and support. Germany and 26, for example, relaunched its premium account in 2019 to cater the specific needs and tasks of its subscribers, such as discount, co-working space, and online travel booking site. So they have broader their protection of facilities towards the customer in order to bring more traffic towards this site. Machine learning also has security application. British Revolve, for example, they unveiled a new artificial engineering solution in 2018 to combat card fraud, money laundering, develop deep insight and prediction around customer behavior to dynamically identify new card fraud patterns without human intervention. On one side, it eliminates the factor of biasness because it's not doing by any of human beings. On the other side, they have challenges too because every challenge brings new innovation within the system. Integrated payment provider with platforms that can offer payment as an additional stand to an already comprehensive business management system. And lastly, mainstream use cases for NFTs like creators strengthening their earning power with digital representations of their content and artistic ensuring loyalty distribution or NFTs as ticket or membership cards. Now, next topic is that is pillars to fintech. There are three pillars to fintech. One is innovation. Second one is customer centricity. And third one is regulatory compliance. We are going to discuss each one by one. First of all, innovation. Fintech companies witness as the platform offering innovation solutions that include mobile payment application, online payment gateways, point of sale, PSO system that also help to record the official way of transaction. In developed countries, every retailer having POS system. In the developing and underdeveloping country, their tax collection authorities are asking to each retailer to establish their POS system in order to avoid the tax theft. Peer-to-peer payment platform, digital wallet, cryptocurrency payment processors, and invoice financing platform, among others. Spectra of the innovation from a related financial intuition through increased access to lending, wealth management, insurance and investment, both to individual and SME. Great innovation comes great responsibility. Our responsibility within this context, which relates to the management of the risk and the adherence to strict compliance requirement. So these are the challenges which is a part of every era. With the innovation, the responsibility also increases, and we also used to face further challenges to overcome multiple factors. According to the International Monetary Fund, that is IMF, the The inflation dynamics in 2024 will have important implications for the global economic as it will affect exchange rate, interest rate, asset pricing, income distribution, and the debt sustainability of many countries and the region. So, particularly, or you can say globally, we are facing these challenges and trying, the states are trying, or the economists are trying to overcome these challenges and major purchasing power of the people are badly affected due to this inflation. To meet these challenges, FinTech and other innovative solutions providers are no expectations. FinTech companies to focus on improving the following crucial pillars of success to thrive in the rapidly innovating financial technology industry, sophisticated understanding and the appreciation of factors that will enable growth and sustainability, which is within such adverse scenarios. Now, the second comes, that is, second pillar is consumer centricity. FinTech companies should prioritize to deliver to meet the customer expectation, build user-friendly platforms, offering personalized services, providing customer support to meet the evolving need and the expectation, customer services and relationship management is an other critical era where the artificial intelligence technology provide tangible value. FinTech companies can use chatbots to quickly answer customer questions and improve the customer's overall experience with their product and services. But this change in the technology also becomes a challenge because every customer will not satisfy with chatbot. They want to interact with the human being. You can transfer the information through this channel, but in order to satisfy the customer, uh, conversation works more effectively. Data security is the process of protecting electronic information by mitigating information risk and vulnerability. FinTech companies deal with sensitive customer data, making data security and privacy critical aspect of their operation. FinTech firm must implement robust security measures to protect the customer information and adhere to data protection regulations to maintain the customer trust. It is still a challenge, but they are trying their level best to work within this area, and they are protecting the sensitive information by developing multiple layers. The third pillar is regulation and the compliance. The central banks of country keep updating its regulatory guidelines for the financial sector and especially on cybersecurity from time to time. Compliance with regulatory requirement is essential for fintech companies operating in the highly regulated industry. Fintech firms need to have a deep understanding of the regulatory landscape and implement robust internal controls and risk management systems to ensure compliance and mitigate regulatory risk. So, in this aspect, they also ask the company to provide training to their employees in order to having the update information related to regulation and the compliance. At the speed, delivery, and the capability of the fintech firm, they work from those of the traditional financial services organization. They must still adopt similar data security and uh, privacy measures in compliance with the current regulation. Now, thank you very much. See you again with the upcoming video on the same topic very soon.